Okay. All right, it's 10 p.m. over here. I assume it's 4 p.m. On the East Coast. We're six hours apart. So let's get started. Let's kick this off. Thanks for coming back. Appreciate it. And welcome everyone to today's webinar, which is the continuation in our series of how to make life-changing money from crypto in 2021 and cash out right at the perfect time. Even if you are starting from nothing and don't know anything about blockchain or which coins to buy, or without relying on luck tips or having to waste countless hours on doing endless research, basically about all the stuff that I did. Okay, so in our first installment, we did a deep dive into the theory of what drives our crypto momentum system. And today I'm going to push you right into the deep end a little bit of the pool. And, I'm going to show you a very simple and very robust way to trade crypto that we can do on a longer term basis, right? No flash in the pan. So we are interested in trading crypto on a long-term basis, at least to this particular bull market, right? And beyond. So buckle up your seatbelts, Dorothy, because cancer's going bye-bye. Always wanted to say that. All right, so momentum, the perfect edge to exploit for crypto asset trading. So that's the theme of today. Today will be all about momentum trading, which is the perfect way to exploit big moves in crypto assets. Big moves is what crypto is all about, right? And, micro futures or not, I don't think it's going to change anytime soon. And clearly trends in crypto are incredibly strong, they're insanely strong. And I did mention this in our first webinar, trying to, for example, build a system, around mean reversion that works in crypto. That would be tantamount to, sucking a melon through a straw. It's not only hard to do, but what comes out the other end is likely to be a big mess. And it comes with a disclaimer, and I'm going to talk a little bit about that a little bit further on the line. So now, among momentum systems, there are many edges that we could be trading that may be viable, but I'm going to show you the best one, okay? So before we decide which type of system is best for trading crypto, we need to decide if we should trade, with or without a system. Maybe I just want to be a discretionary trader. I know quite a lot of people that just enjoy being discretionary traders. If you're a sucker for punishment and get off on all the agony and defeat, then hey, have at it, right? But spend your evening scrolling through hundreds of comments, over at Reddit or crypto, and debating your opinions with other guys online who are equally as clueless about you, or me, what Bitcoin or your favorite altcoin, what have you, is going to head next. I think it's a little bit of an exercise in futility. I know I'm a bit cynical here, but believe me, there is a piece of truth to this, because there are a number of people, even on my blog, and I guess you've been there many times, some of them regulars who seem to have absolutely no interest in trading systemically. By systemically, I mean, with clearly defined rules and with no exceptions. So that does not make them bad people, okay? And I don't know if they're profitable or not on a long-term basis. I hope they are, right? But if you know my work, or at least on a cursory level, right, then you understand that for me, it's all about the rules. It's all about systemic trading, and that even extends into trading options, which clearly is the domain, the core domain of the shoot from the hip discretionary trader. There's really good option traders out there, and they're rare, but they have certain strategies that they really favor, of course. But many, they see the tape and then they trade based on that. They don't have really a plan. So let's kick things off with a question to everyone here in the chat. Has anyone watching this ever traded without a system? And how was it? Was it stressful, confusing? Did you have to make difficult decisions? Okay. Let's look at the chat here. I see only 5 a.m. Korea. Okay, so, okay. Roberto, hey, welcome back, Roberto. Muchas gracias. It was all 3, says Roberto. Michael says no. Okay. Billy says yes, lots of uncertainty. Michael says expensive. All right. Too many emotional bad decisions. Guys, I've been there. Okay, you're not alone. And whoever I cannot pronounce says I agree. Okay, awesome. So my point is that any discretionary trading and crypto, obviously no exception, probably on the contrary, it can really mess with your mind. And you recall that I produced a whole series actually on trading psychology, like a year or 2 back, probably 3 years back. Time really flies when you're my age. So something I'm going to present here, if you think it's complete horsewash, right? And if you prefer to trade crypto on a discretionary basis, then I really encourage you to at least go and watch that series, as it might indeed prevent you from going completely bonkers and broke, probably in the process. It may even save you from, wiping out your account. So I put a lot of work into this, and for a reason, because if you trade discretionary, you need to be on top of your psychology, right? And if you've traded more than a year or 2, then you know this well. This feeling. Real traders know this feeling. You've been there. Maybe it's just a big loss that still eats you up, for weeks on end, and maybe you're afraid to share that loss with your spouse or long-term partner. Or it's a big winner on paper that turned into a dime, and turned on a dime, sorry, and then produced a big loss instead. Has happened to me. That's not a good day. Or maybe it was just watching Bitcoin go from 17,000 all the way down to 4,000 in 2018, the dark year of Bitcoin. I mean, it was rough, right? And it really, really, really tested the mettle of those hodlers, hodlers. So, I'm a pretty experienced trader, and it may surprise you to know that I constantly have to manage my own state of mind, my own psychology. I mentioned that. And if I let things slide for too long, I can quickly end up in a very dark place. Now, not that I'm uniquely susceptible, but I do have a tendency to take matters very seriously. I wonder why. Well, if you know what I mean, that's simply part of who I am, and I fess up to it. And it's part of my nature based on my background, right? We take things, we crowds take things a little bit more, personal, and we beat ourselves up over our failures. So that is my personal Achilles heel I have to deal with. I have no problem letting a winner ride. I know a lot of traders who do. Let it ride for weeks on end. I love it. And I have no problem taking a few consecutive losses either. I've taken many of those. Right? But what really grinds me is realizing that I've made a mistake that could have been avoided. And that really gets me going. And, or for instance, that I would have devoted a lot of time to something, then the end goes completely sideways, right? And it was a huge waste of time. And when you develop trading systems, that is really something that happens all the time. It happens all the time because it's just the price of admission, right? You just don't find a system and just, it's done, right? It's perfect, iterative. And a lot of times when you actually drill down into the lead, I don't know what the expression is. If you really get down into the weeds of things, that's it. Then you figure out like, I've been just fooling myself, right? Hey, maybe I made a mistake. It happened to me too. I thought I had this huge edge, and then it just blew up because I just made a coding mistake. So, there are numberless ways to fuck yourself in investing. Pardon my French, but you have a trade turned into investment, right? And in the previous webinar, I hinted a little on that when I spoke about all the years I spent developing trading systems of all kinds. The research, all the coding, optimization, hunting down the bugs, right? I mentioned that. So that it runs on its own, without blowing your account. supposedly, and sometimes bad things can happen, especially with auto trading. So yeah, it's a shit ton of work, but I gladly do it. I gladly do this work because, not out of some nerdy obsession. I honestly have better things to do at my age, but because I imagine, and also not because I imagine finding the holy grail of trading or something like that. I've given long up on that. Sometimes you think you're close, and you find good edges, but it's like that. That holy grail. And so yeah, it just doesn't exist. You just find what works and make it work, right? So yeah, it's a shit ton of work, but I'm glad to do it. And also because if I just shoot from the hip, if I just go out there and pick charts like my runny nose, then I'm almost guaranteed to just screw myself somehow. And this is important, not because I make necessarily bad trading sessions. No, siree. I'm actually pretty good at spotting entries. I think I'm a good mind for seeing patterns and stuff, but based solely on just price formations. That it's the problem is that I treat those trades very differently from the ones that I take based on clearly defined rules. If that makes any sense, right? Because you take them personally, right? When they blow up in your face, you take them personally, right? So, look, I have a rule-based approach. If I have a rule-based approach, then my ego stays out of it. It's kind of the bottom line for me. So, this trade went sideways, fine, whatever, right? I mean, the rules are the rules, and that's how I really have conditioned my, my cerebral cortex over the years. I just move on, and I think that's good. That's how I make it work. But that one entry that I just take on a hunch, damn, forget about it. You cling to those fuckers because you don't want to be proven wrong. The little ego in your head is just talking to you. You don't want to admit, that you made a mistake because it's on you. It's on you. You made that decision, right? Maybe you even broke your rules for that trade, and then it blows up your face. And you're trying to instinctively trying to kind of get it back from the brink. Of course, it's ludicrous, right? Just cut it off. Anyway, that's my Achilles heel, and I'm sure you have yours, and that's why I cannot trade that way. Maybe you guys are better than me. Chances are you are, but I do what works for me. Plus, rule-based, systemic trading can work for everyone, and that's what I teach you. So, one big glaring issue I see when it comes to trading crypto, in particular, over the past few years. I have to stay lubricated my voice here because last time my throat started hurting. I'm not used to speaking so much. Is that the problem is that it just keeps on going, up and up and up and up. And that effectively provides a lot of cover for very shitty traders who end up making ungodly amount of returns by simply, BTFD and hodling, right? And when the music stops eventually and they get caught with their, asses in a sling, which happens, they don't know what to do. I mean, they end up like a deer in headlight, right? With that fully loaded, F750, on a collision course. And they just don't stand a chance. So they don't see it coming because they bought their first coins maybe, 6 months ago, 3 months ago. And all they've experienced in their short trading career, because it's probably a new thing for them, is a raging bull market. This is the new normal for them, or is the normal for them. Well, Bitcoin is only up 5% today. So those guys don't track their spreadsheets. They don't work, they don't use stops. They, well, in their defense, okay, stops probably wouldn't work very well in crypto anyway. But at minimum, when entering a trade, right, you kind of want to know, what your exit, will be, or what your max loss will be. So they really don't understand any of that stuff. They don't know anything about position sizing. Then don't know, compounding really. They never heard about pair trading, basket trading, diversification in general, capital commitment guidelines, all that good stuff. And they simply don't think in those terms. Dunning-Kruger applies. If you heard about that, right? You don't even know what there is that you don't know. And it's stuff that you need as a trader really in order to survive, especially when it comes to, trading crypto on a long-term basis, right? And there's just no one thing, hodl, and just, and just wait. Because Bitcoin always turns around eventually and wipes out your loss. I mean, don't take my word for it. Just, after this webinar, if you have time, head over to Reddit and, whatever, and dip into the comment section there. And it's really the prevailing mentality. So, okay, fine. If you don't care and won't even look at your coins for several months or maybe even years, then that may actually work out very well for you. We covered that last time a little bit. But it's not a viable approach really for a sustainable trader who's interested in consistent results. And definitely not for one who's interested in maximizing, returns on a long-term basis. And that's, really what we're here for. Now, most of you guys are probably quite a bit more experienced than that, I hope. And I usually attract a pretty good crew, but good caliber audience, right? But I think you know where I'm coming from. So, another way of how to really screw yourself in crypto is to pick one or more of those coin gurus, right? We featured in the previous webinar. If you haven't watched the previous webinar, I put it online. Definitely watch it. I think it was well received. So you sort of become like an obedient disciple, right? Suddenly everything this guy says or girl says, is pure manna from heaven. And, but in most cases, all these guys really do is kind of feed a bunch of garbage into your, into the already inflated ego of the crypto community. And it's become sort of like a secular religion, with even its own lingo, and rituals. And that's when I usually pay attention. I see actually similar trends over at Wall Street Bets and, on Reddit. And honestly, while I initially was very amused about the whole affair, I think there will be eventually a big price to be paid, and some have paid that already. So I could give you coin tips, right, based on my personal opinions until the cows come home. But what the fuck do I know? I mean, do I know more than Pomp and all these other guys? We listed in the previous webinar, and they are clearly, consistently wrong when picking price targets. And I know a lot less than these guys. I mean, what? I mean, I there's nothing probably about crypto that I don't know what that they do. And but the one thing that I really know about is building trading systems. Maybe with the exception of what this guy Mark Isuko over at Morgan Creek, and then what Arthur Hayes over at BitMEX. Right? Those guys are hardcore coders. I mean, they're hardcore systemic traders and quant traders. So those guys probably run circles, so on, guys like us. But compared with all the other clowns that I featured last time, I think that is my leg up, and that's what I'm going to use. Right? So anyway, these days you can't really swing a dead cat without hitting some asshole with a strong opinion on where crypto is going, or some crypto coin, where Bitcoin is going. But nobody knows really jack about it, and it's just mental masturbation. Or I think it's going to go there. Yeah, based on what, right? So I usually just smile, nod, and agree, and walk away. Virtually or in person. So the truth is, the only way I've found that actually really works, is to have a set of trading rules and stick with them. And, that's what we call a system. Like we talked about in the last webinar, the usual way, is to get some bags of altcoins and the one you like, or that, a friend recommended, or your new favorite guru, and some Bitcoin, Ethereum, and then you just, hope and pray. Now, in a bull market, this isn't the worst strategy ever. We touched on that a little bit, right, last time. And it will probably make money if you can figure out when to sell, right? Disclaimer, right? And, I probably can help you with that. We're going to go into all that a little bit later. But, it's based on some data-driven decisions. And I'll also show you a selection of coins, which is what we'll be talking about as well, which is, I think, little bonus here. So I don't mean just, when I say massive amounts, right? Some of your clients might moon eventually. And I don't mean just a little bit of profits. I mean, I'm not talking about another 20%. That's not what I'm talking about, right? What I mean is to squeeze 500 to 1,000% out of a bull market, all right, by doing it properly. So effectively, you're not just riding bull, right? You're slaying that beast and then sell it for parts. And that's called, being a professional. So yeah, I want you to understand, we are leaving massive amounts of profit on the table. And, we shouldn't do that because we don't have to. So let's look at some of the most popular coins, the ones that really everyone loves right now. If I poke around, I'm sure Polkadot is in the top 10 coin lists right now, and DOT. And as you can see, it's been losing money, right? It's been losing money against Bitcoin most of its life. And by the way, this is a Bitcoin cross. I think that's important to point out, not a dollar tether cross. So, just so FYI. So, and then all of a sudden it turns on a dime, right? Drastically outperforms Bitcoin for like about, 2 months here, right? Into early March. And basically has done nothing ever since. But yet, it's on everyone's favorite list. It's on everyone's favorite coin list. I mean, ask around. If you come across 10 altcoin traders, I bet you that at least half of them are holding DOT right now, Polkadot. And this is not a unique example, right? Instead, it's almost prototypical. So it just, calls around forever, drives you nuts, then bomb, it explodes higher and suddenly everyone loves that coin. And so the biggest issue you see here is for discretionary traders, right? That they'll probably start piling in around here, at the top, right? And then when the excitement dies out, within a week or two, it's back at doing nothing, just like before. Like it was, it was actually going down. It was doing something, right? So, I mean, is this thing going to make another run higher like it has here? Anytime soon? Who knows? Many are just one-hit wonders, right? And then they sort of die a slow death, right? So for the vast majority of its life, DOT has underperformed Bitcoin. And altcoin, is inherently a more risky investment than Bitcoin, simply because of its long history. Taking more risk for less profit, I think that's stupid, right? Bitcoin inherently, I think, is a much more stable investment. And I know if you're new to crypto, right, then this might sound a bit strange to you, like it's a stable investment. Bitcoin, what is he talking about? Yeah, but compared Bitcoin to some of those altcoins, and you quickly see why. We did cover some of that already in our first webinar. So let's look at some others, right? Here's another example. Luna, all through 2020, right? All through 2020 was just terrible thing going. All the way into early January this year, actually, it went from 5,000 satoshis all the way down to a little bit over 2,000. So 2 divided by 5, which is 0.4, minus 1, that's 60%, right? 60%, lost 60% in that year. And that's actually slow, I've seen. And then all of a sudden in 2021, from 2,000, satoshis, it shoots up to 18,000? Yeah. Down first 60%, remember, and then now it up 900%. I mean, it's great, if you can time it. Now it's, but now it's a great coin on campus, right? But remember, in order to get back even to break even after that 60% loss before, you needed how much of a winner? Well, it's easy, right? 5,000 divided by 2,000, what 10 divided by 4, it's 2.5, right? So someone who held it from 5,000 to 2,000, and you need now a 250% explosion higher just to get your money back, right? And here's another issue with retail trading in general, but with crypto traders in particular. They don't think in these terms. They just don't. It's not a mental process they're accustomed to, and nobody ever taught them this stuff, right? Unless they came to, Evil Speculator or, RPQ. So again, Dunning-Kruger, they don't even know what it is they don't know. So let's do another one. It's Uni, right? And it's kind of relive the experience of it, of someone who bought the spike, right? Bought the spike, and then held it all the way, through the trough here, right? That's down here somewhere. By the way, this chart doesn't even show it all, because on a candle chart, like right here, on a candle chart, it spiked up all the way to, I think, 78,000 or something. And then it dropped to, what is it, 12,000. That's an 85% drop. That's nasty. And yeah, it does come back, right, with a vengeance this year. But don't let your eyes deceive you. Look closer. Look closer. How long did it take to go from, 12,000 Satoshis back to its former glory? The close was a little bit over 6,000 here, 60,000, sorry, sats on both sides, right, here and here. So, how long did it take? Well, down here, that's around January 2021. I think it's around January 11th or 10th or something like that. Up to here, which is around, beginning of February or end of, let's say it's called January 31st. That's 20 days, right? Yeah, it's 3 weeks, right? It's gone up since there a little bit, after one more correction, by the way, everyone probably biting the fingernails, but the meat of that move was done, done and dusted in roughly 3 weeks. 3 weeks. You think you could have caught that? Yeah. Who thinks they could have caught that? Anyone? Bueller? Anyone? Okay, I have no takers. So either everyone went away. No, everyone's still here. Good, thanks, guys. No chance, says Ricardo. Thank you, Ricardo. Check us in the mail. Okay, I could go on and on, but it's the same story every time, right? Shitty coin does nothing, there's nothing, and then bam, right? It explodes higher and either dies or goes back to doing nothing. And that's kind of the story, right? Every time. Now, let's talk about the Crypto 20. Crypto 20 effectively is like an altcoin index, of the top 20 altcoins, sort of a crypto equivalent of the Dow, but for altcoins, the shiny ones, right? It's a really good way of kind of looking at what the altcoin market is doing as a whole, right? A little bit like the Dow. And let's see how it performed, right, during the last few years. Ouch. Yeah. So we're starting here on the left, at the end of the previous bull market, that was here, right? Somewhere February of 2018. And so as you can see, for the vast majority of the time, again, just a crappy thing to own. And then the only times when it would be better to hold than Bitcoin, right, are here in these red boxes, right? Right here, see, here and here and here, here. And here since early 2019, right here, right, we're actually looking at what could be, right, the early stages of an altcoin bull market. Why am I saying that? Because look how we, breached the highs and all that kind of stuff, and of the previous bull market rally. But what's really missing is a little bit of a retest, right? Anyway, so, but remember from last time, this is not a stock market, right? It's not a stock market. This is, was a comment, do you consider Ethereum an altcoin or is it upgraded, right? No, I don't think it's related, and we're gonna actually get to that. It's a very good question, Ricardo. I'm gonna answer that later. So anyway, so remember, this is not a stock market, right? This market really ticks on a different beat, right? So if you're trading altcoins, then starting from right from the left, you kind of like hate yourself. You hate yourself. You're a rock star, right? You hate yourself. You hate yourself. You're doing okay. Hope is glimmering, right? And here, then no, not again, right? And then it kind of goes like that, the emotional roller coaster to this downside, and then here at the end, see, I knew it all along, So that's kind of really the emotional roller coaster that people go through, right? Remember the monks, I post sometimes, exactly like that. So, the strongest outcome of this bull market. Can any of you guys guess which one it is? If you can, please put it in the chat. I'm curious. Anyone? Oh, you suck, Ricardo. Yeah, Ricardo got it. Yeah, everyone does. Okay, I'm leaving. You guys know it. Yeah, Doge, obviously. Yeah, absolutely. Had you asked me, I mean, you guys seem to be smarter like me, because who seriously, with a straight face, would have stood up in a room full of people, like a year ago, and exclaimed loudly that Doge would be the strongest performing coin in this bull market the next year. I mean, how could you have fucking picked that? There's no developers. There's no technology, really. There's really nothing. It's a freaking meme. It was created as a joke. But, I threw that one in yesterday, I think. I mean, look at this, right? Seriously, Dogecoin spikes 50% intraday, cripples Robinhood's crypto trading. It has now surged above Ripple to become the fourth largest cryptocurrency. The Ripple army is not going to be happy about that one. We'll get to that a little bit later. But yet for most of its life, right, Doge has been a crappy investment. Up, down, up, down. This chart looks like the inside of a shark's mouth, right? I mean, who here honestly thinks they could have timed these rallies? Anyone? I mean, I couldn't. Oh yeah, Lucky says, hi Lucky, Doge is the next GME. Billy disagrees. Here we go. Keep it civil, guys. Who here, thinks they could have timed these rallies? Anyone? Nope. Okay. I don't think so. Oh, by the way, and then when you timed it, you caught it right here, right? And then you actually sold it right up here. Okay, let me be generous up here. Could you? I don't know. I can't. No way. Ricardo says no way, and you have a system that you can. You are the man. Well, maybe I do. So moving on. Well, we did. Our system actually picked that one, and I told you a story yesterday, actually, and the system picked it, but Scott didn't take it. I, for one, blame Scott for that one. Yep. Scott is my default fall guy when things go wrong with the system. But our system picked it. The algo picked it, and that was important. We did still do 20% that week. And then Scott was, I remember Scott was bitching, whining like a little bit. Oh, man, could have made another $100,000. Like, dude, shut up. You're jinxing it. Anyway, that's Scott for you. Anyway, who thinks systemic trading might be a better investment method than just guessing? I know it's kind of a loaded question. If you wouldn't think that, you probably wouldn't be here. 1 second, guys. I'm going to put my sweater on because it's getting cold again in Spain. It's never going to be summer here again. Just put it on the right way. Okay, 1 second. Here you go. So in the meantime, anyone? Guam in Mexico. Oh, God, don't remind me. Miss Puerto Vallarta. That was awesome down there. Conchas Chinas or something. It was so brilliant. Yeah, although it's getting really, really humid there now, Okay, so I think most of you guys probably agree, right? So let's talk about which type of system is going to work best for altcoins. That's why you're here. That's the meat of the presentation. So there are 4 types of systems I considered, right? When we're building that, or Scott and I actually considered the usual suspects, right? Good movie. Trend following, right? Mean reversion. Pattern-based, like most of my systems, actually, a lot of them are pattern-based, and momentum. So, by the way, pattern-based would be alpha factors, right? And the simplest variation that you probably all have done is candle patterns, that kind of stuff, right? Or price patterns. But you could also do heuristics, correlations, statistics, fractal patterns, and whatever floats your boat, right? So anything that suggests there's a market inefficiency, to be exploited. And trend following, uses trailing stops, for instance. Let's work ourselves to the list a little bit. Trend following uses trailing stops, but it traditionally kicks in very late, right? And on average, at least per my research, you lose around 25 to 30% on your paper profits. And that's in stocks, by the way, right? In crypto, if you can do better, then hey, write me. In crypto, that would quickly turn into easily 60, 70%, that approach, simply because on the type of duration we just looked at, right? I mean, remember, Doge. So try to, also trend following typically enters very late, right? Most people don't remember that. Just think about the turtle system. And you guys trade the turtle system. That's how I started out in trend trading. And it gets in the door very late. Right? Remember the upper Donchian, I think it was the 100th day or something. It's been many years, but you get the idea, right? By the time you actually grab your seat on the bus, it's all over already. Right? So, mean reversion, right? I said before, it doesn't work in crypto. That's only half the truth. If you really play only the long side, right? Forget about the short side. Then you're able to eke out a small win. Because remember, the charts we looked at, except for Doge, right, which looks like Dr. Seuss' worst nightmare. So these coins, they shoot up and then they stop, and push either sideways or, just down a little bit, then continue higher, right? So it's more of a scalping affair in it, right? And even if you pull it off, right, then, mean reversion takes small wins. It's obviously not the play. Right? The real money in crypto is really holding for the whole bull market, right? So if you want to start trading crypto, mean reversion. Come on. Use sandpaper to wipe your arse as well. You might as well, right? The real meat, really, in the crypto market, at least as of right now in 2021, is to ride the bull market higher. Period. Future Mall in 2025 may have a completely different attitude about this, or outlook on things. But today, today's Mall, he's mainly interested in exploring the long side. The long side of the force. So, even if you're able to find a repeatable pattern, right, to when it comes to pattern-based systems, to be exploited in altcoins, that's somehow doubtful based on what I've seen so far. Maybe you can do it, but even if you do it, right, if you're really good at finding some type of fractal pattern that can be exploited, market efficiency or inefficiency, whatever you might call it, right, your assets are effectively in a holding pattern for much, if not most of the time. Yes, Eugene, you did not. Eugene asks, did I misinterpret you? But didn't you say that crypto doesn't lend itself to TA? I think he talks about technical analysis, not the other thing. It doesn't. No, not traditionally. And Eugene, did you watch the previous webinar? If you haven't, please watch it. Well, anyway, but let's say you just got God's gift to, pattern-based trading. And you manage to produce, let's say, 50, 100%, heck, even 200% a year, okay? Meh. You're not even keeping up with the Bitcoin hodlers at this time, right? So why bother? A lot of noise and hard work for results that you can probably pull over in the stock market or trading options. I can do that in options. What I'm going for is not 100 or 200% per year. I'm a greedy bastard. And so damn it, I want 1,000% a year, maybe 10,000 if I can make it happen, right? I'm crazy like that. We trying to get crazy with this saying. Don't you know I'm loco? Anyway, so Kara moves on. All right, so in a powerful market, you want to be invested, right? In the whole time, in the whole market, the whole time, right? You want to have a dog in that fight, and you want to tear that shit out. So that's the general idea here. So let's talk about momentum. Momentum, reading down from the slide, right? It's a rigorously tested phenomenon in stock markets where winning stocks, not winning ones, winning stocks tend to outperform in the future. First discussed in a 1993 paper by somebody whose names I cannot pronounce, and Sheridan Titman. Yeah, I can only imagine what the poor guy went through in high school. Can you imagine hazing? Anyway, after years of psychiatric treatment, he managed to get his act together, right? And then he wrote this paper together with the one guy he could find, that whose name you cannot pronounce. Match made in heaven, right? So anyway, the paper is called Implications for Stock Market Efficiency. And the basic idea is the stock market outperforms in the market most recent periods is statistically more likely to outperform in the future. So if the stock market right now performs in recent periods, it's statistically more likely to outperform in the future. If that makes any sense. More of what you got. You get more what you got, right? Basically, a little bit like we also observe in implied volatility, by the way. Just pop my head. So, basically, the way this works is really human nature. We like to bet on winners and we forget about the losers, right? And there's really no technical analysis involved. Simply, we are just as stupid as we used to be a million years ago, right? And so we like to bet on winners, right? And we kind of, forget the winner, the losers, right? Very quickly. Nobody talks about them anymore. So, by the way, another phrase I really love is, success has many fathers, but failure is an orphan. Love that one. But you get the idea, right? Everyone loves a winner. So in the same way as, Amazon took the lead in retail and kept growing, Facebook took the lead in social media and kept on growing. And Google took the lead in search engines, right? Optimizations and, who knows what else they're doing now. And they kept on growing, Or back, do you guys remember the .com bubble? I'm old enough, unfortunately. And, remember Yahoo? Yahoo took the lead. Everyone hated Yahoo for years on end. That just everyone kept talking about how Yahoo didn't deserve to keep going up. And that's why it kept going up, of course, right? That was a very educational moment for me. Like it or not, we have a winner-take-all economy, right now, and probably will always have, and especially right now where things are so polarized. In fact, most of the VC funding, right, venture capitalist funding, of the past 20 years was based on that very concept, right? Be first, be unique, become the top gorilla. It's actually what they call it in the market. And then, take a flamethrower to the competition, buy them all up or destroy them, right? Hans, give me the Flammenwerfer. Just wipe them all out. And that's what you see happening, all the time. They just gobble up the competition, right? Anyone remember Tizu? What is Tizu? No, I don't remember that. Oh, Tizu. No, I don't. Can you enlighten us, Billy? Anyway, so the coins that take the lead have a statistical tendency to streak ahead. That's kind of the takeaway message here, right? So let's dig a little bit deeper. This Doge, on the red line here, right? On top of a basket of other popular altcoins. Now, I've been dissing Doge to my heart's content here, obviously, but you can see right here on the left, right? Right here on the left, that it was a top dog, pun intended, early in the game already. It was, a top dog right there. And for some reason, it's struck a nerve, which isn't surprising given the, relative maturity of our average, contemporary. And then took off, right? But yeah, it was on top here. And if you notice, it's on top over here as well, on the right. Top here early on, top on the right. So even here, in January, it's way ahead. It's way ahead of all these other mofos down there, right? Here, this January, right? And that's a really crucial observation. There's always a clue to superior performance. And it happens before the big super cycles. Does everyone understand that? Because I think this is really, somebody mentioned Travelzo, okay. I think I remember them, yeah. That's really important point here. I really hope you understand that, because this right here, guys, this is really the full Monty. It's snake eyes in a can, right? If you take anything away from today, that is really it, right? So let's look at the second one, which is Luna, and right here, right? And even back in February, it was already the second, or was that March? I think it's February, March, right? February. It was already the second strongest, altcoin behind Doge, right? Coincidence? I think not. Oh, by the way, go back up, and you see what happens, right? It's up here. Yeah, actually, keeps quite strong in comparison with some of the other ones, but it's one of the top dogs again. And I don't think that's coincidence. Let's do one more, EDA in orange, right? And that's Cardano. It's supposedly, sustainable if you hold, if you care about that kind of stuff. And if you hold it long enough, by the way, it cuts your carbon emissions in half, right? Just kidding. Anyway, so EDA peaks early here. Then kind of paces its strength a little bit, and until it takes the lead early on, right? Takes the lead early on. and kind of eventually runs into here in a photo finish, side by side with Doge. Then we got also whatever, that gray one is down here. I don't know which one is, but it's not really, standing out compared, given all the others, right? But, compared with the other mofos down here, it was way ahead of the pack already. And it's still going strong, right? It's still going strong, see? It's not on the level of Cardano or Doge, but it banked you some very nice coin. Literally in this case, right? Altcoins. So you start seeing what I'm talking about, right? I really hope you guys do. Can I get some responses in the chat, please? So I'll make sure that nobody fell asleep. Sure, clear. Yep. All right, Denali. Awesome. Got it. Yes, sir. Okay, awesome. Thanks, guys. So a coin which starts going up quickly attracts fresh buyers. So that's the theory, right? That's why this is. It gets more favorable price, attracts more buyers. The hype starts, right? The hype machine starts kicking in. At the same time that, sellers stop selling because they don't want to miss out on the potential gains. And after all, nobody knows, the damn thing will go, and everyone is, holding a potential lottery tickets in their pocket. So human nature is to sell things you hate and keep things you love. And everyone loves a winner. That's why people keep on piling into winners. This feeds kind of a positive feedback loop where prices go up and up and up, attracting more buyers. You guys know how this works, right? Force the price even higher, short squeezes. Well, that kind of stuff. Well, not really in crypto yet, but it's coming too. And attracting even more buyers. That's somebody mentioned, the micro's coming, and then, it's going to change. It's going to change the crypto market. Yeah. When I'm going to start seeing short squeezes and stuff like that, that's going to be fun. And how much of that is going to start actually driving the actual crypto market? I don't know yet. We'll see. Manish says, "Hi Manish, thanks, welcome back." Then can one coin be manipulated by Big Boy? Well, that would be illegal, wouldn't it be? I don't know. Would it be illegal actually? I don't know. Yeah, absolutely. Yes, it could be. If you have deep pockets, you can do a lot of things. Remember our last webinar? Those guys, how much did they buy? 160,000 coins, right? The ETF. 160,000 coins, I think it was. I did the math on the spot, and it was like 3.5% of all the coins ever mined, right? 18.5 million as of today, right? We have a few more million to go until we hit 21. So yeah, absolutely, and that might happen a lot more actually in the future. Especially when more of that moves in, and depends on what the participation is, right? If all that is driven by big pockets, we don't know yet who's going to actually pile into the ETFs the most. We did look at some data last time. Then yeah, that could very much happen. Do we care? No, we don't, because that would actually benefit our system. And as we continue, you will figure out why. So anyway, lather, rinse, repeat. That's how it's how kind of the trend builds on top of each other. Now, I'm sure that all of you would have liked to own Doge, ADA, or Luna this year. And if you did, big up, congrats to you. But there are literally thousands of shitcoins, and no shortage of opinions either. And relying on simple statistics, in our opinion, right, my opinion, Scott's opinion, people we're working with, is easier than doing research. I mean, heuristics to the rescue, right? If you did 1,000 hours of research, you probably would still end up buying mostly the same coins as a momentum algorithm is going to choose for you. The ones that's going to pick out, except you won't have any bad picks, right? Because the algo picks the strongest. That's what it does. And that's really the critical thing. You do your research, pick 10 coins, and even if you're lucky, 2 of them work out. With momentum systems, excuse me, your average pick is better simply because you cannot pick any losers because you're picking from the winners. They might have a bad week, but it doesn't make it a bad coin. So, in the words of Eugene Fama, right? Francis Gene Fama, he's an American economist, right? Best known for empirical work on asset pricing, portfolio theory, and of course, efficient market hypothesis, which you probably heard about. And he says, that there's an exception to his own efficient market hypothesis. There's an inefficiency in the efficiency, an anomaly in geek speak. And, but that's what he also wanted, a Nobel Prize for. So what is the anomaly, right? The premier anomaly in finance is momentum. And that effect is observable in, everywhere. Future stocks, across sectors, futures, forex, across every country, in both developed and emerging markets, doesn't matter where you trade. And it was observable a long time before Satoshi Nakamoto wrote his white paper on Bitcoin. So is it surprising to see the same phenomenon being observed in the crypto market? Yeah, that is a rhetorical question, right? It is. Of course, it isn't, because that anomaly has very little to do with really technical analysis or quant finance. Rather, it's all related to human nature, which is just like, Bitcoin blocks. It appears to be immutable, meaning it never changes once, maybe not best comparison. Okay, I thought it was funny. Anyway, so what Mr. Pocket Protector here, calls an anomaly, I call a market inefficiency. I call an edge, and that, my esteemed, ladies and leeches, that's really where we come in, right? That's what we're looking for. That's the good stuff. So the premier anomaly in finance is momentum. Nobel Prize winner didn't just say it's an edge. He said it was the best edge in all of finance. How do you like that apples? I mean, talking about low-hanging fruit, in my opinion. Plus, it's a lot more fun to trade than mean reversion system, unless you have, masochistic streak, I guess. I say at least. And, because it's all very well documented. Momentum systems do have a strong edge, which is why they are being used all the time, by professional traders, institutional traders, of all stripes, quant trading firms, what have you. And there are literally hundreds of billions of dollars being generated every day by momentum systems. So, look, one thing I'm really good at, so there's not many things, but one thing I'm good at is building and optimizing trading systems. And so Scott, right? And we both have our different approaches to it. And there's one thing I really have learned over the years. It's a trivial thing, really, but here it goes, right? The best way to create a successful trading system is to start out with a strong edge. And that's really it, right? There's no much magic behind it. You'd be surprised, however, though, how many people build systems around like marginal edges at best, right? Just because of actually, I don't know why. I don't know. They just do. I mean, maybe it looks good on paper, or they fell in love with this idea, or who knows. People do crazy things all the time. But as I mentioned already, momentum trading, it is a lot more fun and rewarding, actually, personally, at least that's my experience, than anything I've come across, be it trend trading, or, even mean reversion, scalping, swing trading. Swing trading can be fun, but momentum trading is the most, in my opinion. Psychologically speaking, momentum systems are also the easiest ones to abide by. I mean, who doesn't get a kick out of this breakout that you just nailed and that turns into a 5-hour winner or more? I mean, it makes you feel like a rock star, right? It makes you feel awesome. And I've been there many times, and trust me, it feels great. It's great. So the good news, the momentum effect is way stronger in crypto assets than it is in stocks. And this is because crypto investors are tribal with a lot of biases. I mentioned the XRP army before, and those guys, they won't sell, because they really believe in their coin. A bit like football fans, right? I mean, need I say more, right? The XRP army, yes, they have T-shirts. So just in case you thought I made that one up, the XRP army, for the uninitiated among you, it's basically comprised of a bunch of crypto nerds who think XRP is the next best thing since sliced bread, and they're willing to lay down their lives for it. I exaggerate, of course, but you get the idea. Those guys are fanatic over XRP. It's their favorite coin. It's a religion for them. I mean, you say anything bad about Ripple, right, on Twitter, and next thing you know, you're being hounded by a legion of irate, Twitter hooligans, and telling you how wrong you are. You simply don't understand, because you're stupid, right? Insulting your mother, sorry, or anyone else who agrees with you. So yeah, these guys believe in their coin, and yeah, they're a little bit like the Millwall fans of crypto. Remember those guys? Fuck you, a Millwall. Remember that guy who fought off those terrorists in London with nothing but like what, bread knife or something? You gotta respect that guy. Yeah, they're not like that, but they're more annoying. But they come from the same place, right? So they're really fanatic about it. So how does this work, right? You may have heard of market beta, and basically beta is I don't want to be patronizing. I'm sure you guys, most of you know, but just for anyone who doesn't, it's basically measure of stock's volatility and also performance in relation to the overall market. So you compare what the stock does and see how it holds up against the market. You can also do this with a portfolio, right, or trading system, whatever. So it's market beta, right? And it's a pretty simple concept. If your beta is 1, then you're performing, as well as the market. If it's -1 and you the other way. If your market beta is 2, then you're performing, twice as well as the overall market. Market beta of 2 is really, really good for many fund managers, right? So momentum systems are designed to outperform the market, and that is their core premise. You ride the strong rallies and you just skip all the other shit, right? And they're not doing anything other than that. That's it. Momentum systems are designed to outperform the market, period. So how does it work? Well, we have a 3-step process, right? 3 steps process. Schubit's Alcoholics Anonymous, because they've got 12. No wonder people are drinking. Not to make fun of that, okay? Very serious topic. Behavior myself more. So first of all, we rank all the coins in our universe. So you rank them from 1 to 500, whatever, right? How many you have. Second, you start, buying the strongest coins based on criteria we're still going to explore. You do that until you run out of money, which creates basically effectively a basket of coins that you're trading. And third, every week you rotate. You rotate into new coins that rank higher based on your ranking methodology, right? And you drop the ones that fall below a certain threshold. So effectively, you are always just holding the greatest and best performance in your coin universe. It's that simple. So if we have, let's say, imaginary coin, let's call it HBN, for has-been. Now, has-been, used to be an awesome coin a few weeks ago, but now it's getting a bit long in the tooth, right? And it's starting to lag behind the other coins. And if you would be trading, HBN on a discretionary basis, you may actually drop that damn thing at some point anyway, because, it's just not doing what you want it to do, which is go up. Unless, of course, you're in the XRP army and you're religious about holding that one. But that's not us, so out it goes, and it gets replaced by by one of the winners based on our ranking methodology. Now, instead of doing this manually or intuitively, we of course have come up with a clearly defined coin rotation rule. Because I'm German, so I'm a stickler for rules. Yeah, well, anyway, so a side benefit is that we implicitly are solving an inherent problem with trading crypto. With crypto markets. And, as stop losses appear to be, Manisha, I think I hinted at that, stop losses appear to be a prime for manipulation, even now, right? So now the one thing I know that is, with momentum systems is that they only work in bull markets. I mean, that's something really important to know. And they completely break down in market phases. If you build momentum systems, that's the first thing you learn. You try all kinds of gimmicky things to make them perform in sideways market, but you just can't. You can't change. I cannot change the loss of physics. You can't. It doesn't work that way. So they outperform on the way up, and they outperform on the way down if you trading a short side, obviously. But they completely break down in sideways tape or range bound market cycles, what have you. So, which is why we don't trade. We don't trade during these market cycles. We don't. Right? we just stop. Smartest thing to do. Why suffer, right? So that's it, really. And I mean, no, really, that's it. That's just all we need now is just a ranking methodology and a trend filter, and that's it. I mean, is this clear at this point? I mean, because I really want to make sure that everyone really gets this. I mean, everyone needs to get a solid understanding what we're doing here. Are there any questions so far? Yep, quite simple. Crystal. All right. Maybe there's hope for me just yet, right? So what do we need? We need a ranking methodology, number one, right? And we need a trend filter. Oh, is that all, Mole? Let me just grab that for you. All right, let's get to it, right? What are the advantages, right? No day trading, right? No day trading either. No technical analysis. No chart formations. Hi, Tim. And no watching the screen. Execute weekly. Yeah, and by the way, you're just going to do this once per week. Done and dusted. And it's very simple to execute. So these systems are really delightfully low scale. My Forex systems are literally, I mean, I'm reading this off, but quantum mechanics in comparison. I'm a boomer father. I could do this. Yeah, that's right. Let's take it to the boomers. I'm actually late X-Gen, 1966. I think I'm a young boomer. Boomers go until 64, I think. I'm an old X-Gener, and young boomers actually go to 64. And so I kind of made the cut into the X-Gen. I don't know how I feel about that. Anyway, if I compare this with my older systems, right, the ones I've actually automated for trading futures and Forex in particular, oh my God, I mean, just the stop logic alone makes my brain hurt. The entry logic took me several months to program. My basic structure that I have put together for building systems, right, like it's a base skeleton system that I implemented many years ago in NinjaTrader. That sucker has 8,000 lines of code. 8,000, just to give you an idea. And it checks for holidays, skips high volatility events with the FX street calendar. It parses that one. Closes positions at the end of the session, if you do any session trading. Keeps track of its own performance, based on equity curve. It has that feature. It attempts to take limit orders, by the way, and only falls back onto market if it really has to. All that kind of jazz, all the stuff you'd never even want to. But they might do discretionary, but I decided to put all that in, and it took me forever. But crypto systems, right, based on momentum in comparison, they're effing trivial, seriously, because the level of complexity when it comes to portfolio trading is just a lot simpler. It's a simple rotation game, and it really, especially on a weekly basis, right? And I really enjoy holding them for a week. It's so relaxing. I don't even, have to look at them for a week. I just check the results every Monday, and that's it. It's easy peasy lemon squeezy. I mean, shit, our account, right? We're trading together. Was up to $500,000 before we noticed what the F is going on. And so I'm writing my daily post, I remember this very distinctly, over on Evil. And Scott sends me a signal. I don't use WhatsApp anymore. Don't use WhatsApp. Use Signal. Signal is cool. Just trust me on this. So we keep track of everything. And then Scott is like, check the spreadsheet now. And then I'm checking the spreadsheet, because we have a spreadsheet. That's how we roll. And I'm like, what? It kind of snuck up on us when I saw, the dollar value. Because we honestly, we didn't pay a lot of attention. We just rotated every week, rotating and tracking the performance in USD terms, just Bitcoin. Now, of course, we knew it was going up. But of course, Bitcoin was running up higher as well, big time. It was crazy. I mean, that was just the market doing what it was doing, what it does right now. So, let's not forget about that. It's a good aspect of that. But yeah, it was crazy. Anyway, that's it. And actually, there's one catch, and which, I think you touched upon. It only works in bull markets, which we obviously have right now. Right? I mean, this is a stock system. Here's the stock momentum system. Scott actually developed. He was paid actually to build it for some traders, a few years ago. And you see here, the red line here is the S&P 500 which he was trying to beat, right? So, and I was actually really impressed by the way that Scott pulled it off over in Quantopian. This was Quantopian, and it doesn't exist anymore. I think they just shut down. It's a shame. So anyway, and he did that just by scavenging other people's code. And he's not really a coder, if you know what I mean, right? But I've learned to never underestimate the guy, because he might look like, Shrek painted pink, but don't tell me I said that. But he's extremely sharp. And once he puts his mind to something, he usually gets it done. Beg, borrow, and steal, that kind of thing. That's my motto. By the way, a lot what Scott did here, is really covered in my little plug here, in my system building masterclass. Just your very basic momentum trading with a trend filter. And as you see right down here, right, the red line, again, the S&P, right? That's the one he was trying to beat. And you can see how thoroughly and completely this thing beat the S&P. It beat its ass, man. I mean, it crushed it and then put it in reverse and right over it again. 2,000% here in 15 years. It's nice. But more importantly, right, when it hit the trend filter, look here, right? The trend filter. The trend filter here is on this thing was as sophisticated. It's a good example, like a soapbox car, right? Literally, it was just a 200-day SMA crossing a 100-day SMA. It was just, that's it. It was an individual stock filter. So each one, not the entire index. So basically, if the 100-day was below the 200, you wouldn't buy it. And if it was above, you would. I mean, not exactly a Nobel Prize material, was it? But remember, my golden rules of system development that I keep mentioning on the blog, and I keep harping on that. The key to success, is not, when it comes to system development, is not predicated on complexity. It's not. It sounds like a trivial rule, really, but, you'd be surprised how many people fall into this trap. I know because I have. I'm guilty as charged. As a coder and a system builder, I'm a system building nerd. I get off on that thing. That's why I do on the weekends. My poor wife can profess to that. I'm fascinated by exotic concepts, right? That might give you a leg up. And I love writing about it too on the blog, right? So, hidden knowledge and all that jazz, and I don't enjoy impressing people, right? It's, but if it really provides a benefit. But that's really not what I found in reality. Most systems that hold their edge over long periods of time, they are really deceptively simple. They are. It's just, they don't really are born out of complexity. So when the trend filter, trend filter, right? The SMA crossing, when it crossed, you basically go into cash, right? And as you can see, that simple concept in action right here, right? See how it goes into cash in January 2008, I think, right here, and it stays, throughout what the system considered an inopportune market cycle. Just basically crap time, right? And then in July, it picks up right where it left off, and then right here on the, keeps going on, drops a little bit at the end, here on the right. Now, if you would ask me, what's the best strategy in a bear market? Oh, Tim Knight, if you're listening right now, please cover your ears. The best strategy in a bear market is not to trade. Yeah, simple. Somebody's LOL. But why would you want to miss out on all this juicy gains, Mo? On shorting a fast market, that can be fun. I tell you why. Because most people get their asses kicked in a bear market. That's why. I've been there and I've seen it happen over and over again, and I'll probably see it again if we ever get a bear market again. That is, I've been following the market since 1999, and I've been trading semi-professionally for a living since about 2007. Right? I look at the shit every single day. To my fault, my wife has to drag me away from the laptop during vacations, and I get bored of my mind after 3 days. So, trying to find a ways to beat the market is my game. That's what I do, right? I was born to do that, and I'm happy doing it, right? That's why I'm a little bit of a workaholic. And even I have to be on my, top of my game in a bear market to just survive the experience. I can honestly count the number of people who I know personally. So one question, there's a question, the trend filter is on the altcoin, not Bitcoin. No, that was stock, buddy. That was stock. The trend filter was on stock. There was a stock trading system. So nothing to do with Bitcoin. So anyway, I can really count on one hand the people, even if, I don't know, who have traded through a bear market and came out the other end with a positive gains, in their in their account. And it's exciting as fuck, right? But really, most participants get their asses handed to them. Because why? Because very simple. Everything that happens in bear markets, especially strong bear markets, right? High volatility, which most of them are, runs completely counter to human nature. If you want to know why, by the way, then, another little plug, then buy my system building masterclass. So if you did already, then watch it again. Bottom line, there are easier ways to make money. Easier ways to make money than to short anything in general. And even I would not consider doing it at the current time in crypto. I would not. The gain is not worth the pain, in my opinion. Maybe I'm just too old for the shit. I don't know. At my advanced age, I prefer to just bank coin and, slowly and happily. Right? Tim Weil says, did I miss the volatility piece? Not sure what you're referring to. Maybe keep it for the Q&A a little bit later. So yeah. Obviously, for our trend filter, we're going to use some of the on-chain metrics like we discussed in the last webinar. Right? And we will dive deep into this in our next webinar. Yeah? Yes, we will. Oops, don't jump. Yes, here we go. So let's talk about ranking the coins. In the stock world, this argument is really settled, right? The vast majority of hedge funds and investment bank systems really look suspiciously identical. I mean, you can Google this on your own time, Google it, look at some peer review papers on momentum, and they all say the same thing. The best ranking methodology for stocks boils down to something around a 90-day linear regression line, it's like a slope, excluding the last 30 days. And we're actually going to get into that in a little bit. We're getting into the meat of things now. So they don't use technique analysis. They use TA. The standard ranking methodology is taking the slope of a linear regression line, and that's it. I actually wrote a post on a linear regression. Let's pull that one up. I actually have it handy here. I called it right up here. Linear regression for chipmunks. I don't know how many of you guys remember that one. Wrote this a few years ago and I reposted it. So here, it's a pretty simple concept. And here explain. See, here's the cloud with some just simple. Let me put this up here, right? Just some simple data, test data that I put together in a Python script. And then down here, some math, right? We talk about squared error, First, I would talk about how to calculate the slope, and then I'd explain how to find the intercept, right? Because the intercept is, here. See, that's the intercept right here. And finally explain R squared, which is called the coefficient of determination, also called the least squares method. And it's basically, I actually never seen this shown this way, and I'm kind of a little bit proud of that, if you bear with me, because you see that they rarely show this, and there's another thing I'm kind of proud about, getting a little bit to later. But the concept a lot of times is so academic to people, but you just draw lines, right? And then you kind of calculate the distance, and that's really how I kind of arrived to this. This is really the core of the methodology, right? The other one is the R squared, how it's being actually produced, right? And that's actually kind of interesting. Actually, again, I have never seen this shown anywhere like this. Basically, if you have all these data points, right, you could average all these numbers and you would get a straight line. Actually, that's what I did. That's how this line was produced, right? And then you compare that to the line you have, right? That the slope line, the best fit, line that you produced with the algo, linear regression. And that produces basically a ratio, and that's how you arrive at R squared. And that's a really good way of actually measuring, of determining how good your fit is. Oh, no, I don't want that. Some software update. Yeah, presentation. I want to update my software. Great. Thank you, Brave. Thank you, Brave browser. Anyway, so this is, this is actually what we use to vastly improve our scoring system. The original algo that Scott and his first dev guy had come up with. And that really boosted the performance of the initial system quite significantly. I was very proud of that. And, not to pat my own shoulder, but I honestly think it's one of the better, with this here, the explanation, right? I think it's one of the better explanations out there on linear regression. And if you want to understand it more detailed, then, all you have to do is just Google linear regression for chipmunks and you'll find it. Right? So here's a linear regression line in action, right? It's basically a line of a best fit. Yeah. And in this case, our data series is basically a financial price series, right? As you would get it if you're exporting all your daily closes into a spreadsheet, and then just pick the closes, right? And then you pick kind of a slice of data. You select a slice of data in the data series. In our case, it was 60 days, and crunch the numbers. And as you can see, this is not a trend line, right? The difference being that this line is basically the closest line you could find to all the points in your data series. And that makes it a best fit line. And of course, a steeper line is a stronger coin, because, a steeper line means that the trend is stronger, and therefore it's also a stronger coin. It's a very simple concept, but really that's how it works. Another aspect of that is also with R squared, right? That was also a good way to kind of determining how strong the fit was. And I think that was really key. There was another aspect of it that how we improved the system. It's not really complicated concepts. So Pilot Pete says, very cool. Poor Pilot Pete is stuck in Korea at the airport, and so he's forced to watch this. So he's got nothing better to do. So what do the professionals use? That's really a good starting point, right? The standard ranking methodology for stocks is, drum rolls, the slope of a 90-day linear regression line, excluding the last 30 days. And, reason being that, when things get a bit overstretched, right? People take profits and you get a retracement. It makes sense, right? Of course, I didn't take those white papers as a mantra, as chiseled in stone, like the 10 Commandments. And I wrote my own backtester, because it's just what I do. I wrote it in Python based on, what I've written already. And then I tested the living crap out of it. And lo and behold, what did I get? The 90 to 30-day window performs best on a long-term basis, right? It does. I mean, who would have thought, right? So here you can see a great example of why excluding the most recent tape makes a lot of sense. Because had you included, right, this bit right here, let's say you're here, right? See my mouse, I hope, at the edge of that box here. Because had you included that part here, this bit, then on that Monday, right? Say it's a Monday, you're taking trades right here. Then the LinReg, linear regression algo, it may have kicked, Matic, which is, the coin here, out of the active pool, right? And then you would have completely missed out on that last, the last juicy bit here. And that would be suboptimal in quant speak, or damn bloody shame in good English, right? So we don't want that. We want that's a really good reason, why excluding this period makes sense. Right? It's a really good example. It's just like a textbook example of what we're talking about. And when I started testing, I thought that the standard stock ranking, 90 days to excluding most recent 30, will probably need to be shorter. So I tested. Actually, I tested a lot more than those. But these are the ones Scott asked for, and and I had built a back tester, so I tested those for him, and he did on his end as well. And then put in the chat which one you think won. Oh, somebody's already doing it. 45 and 15. 45 and 15 says Billy Collins. God, you guys are good. How do you guys know this? I'm really impressed. I'm impressed, guys. I have got a smart crew here. See? So yeah, the winner was actually between 45 days to 15 days. But all of them were profitable. And the big danger when you're building a trading system is that you end up curve fitting, right? What this means, right? Building this overcomplicated Rube Goldberg, machine that looks great in the past, but it's a lot more fragile moving forward. It's very easy to fall into that trap, and it really, really can hurt you when you put real money, into the game and then start trading a system live. And that's really the number one danger in my mind, and that's what you have to avoid. So there's a couple of tricks that experienced system traders use to avoid this trap. And the most simplest and effective is really to look at distribution, right? Meaning if 90 days is shit, 60 days is shit, 45 days is shit, and 30 days is amazing, then, I have to assume that they're all shit. Yeah, it's really true. And what you really want to see is a forest of good numbers. And then what you do, you pick the one in the middle. You might not even end up picking the best one, because what that means is that your system is anti-fragile. You remember Nicholas Taleb, right? Anti-fragility and all this jazz. And that means that it doesn't just work in the past, but in the future, which is where you're actually trading, right? So anyway, in the end, we settled on 49 days minus the most recent 14 was my idea. Yeah, I suggested that to Scott because, it's a weekly system. And so that kind of made a lot of sense, right? And it performed well. So all reasonable parameters were profitable, and that gives me a lot of confidence when building a trading system. So you're looking always, talked about already, for a forest of good numbers, not just one standout, which could be random luck, right? So you're looking for an overall trend that basically suggests a valid edge, not just an outlier you pick, thinking that's the magic sweet spot. And it might sound a little bit like an exaggeration, but that's exactly the sort of stuff I was doing when I started to develop automated systems, way back when I started to build systems in NinjaTrader, C# and all that jazz. And I got that handy backtest in there, which, even included a genetic algorithm, right? That's fast and supposedly superior to other, linear algos, right? Where you just have a range, finite range that you're testing. So you're setting all these parameter ranges of your system, right? You expose certain parameters that you want to test, and then you test the living crap out of it. And of course, the damn thing spits out a handful of settings every time. I look really, really good. And, the moving average, might be at 43 and the other one at 67, but, between the hours of 2 a.m. and 5:30 and on Sundays, every other Sunday. I mean, I'm sort of kidding, right? But you get the idea. So that's not a valid trading system, guys, right? It's not a valid trading strategy. And even if it performs right now, it's almost guaranteed to get stomped a few weeks down the line. I should know. Don't ask why. Well, yeah, you know why. So because I did it. So one of the first questions I ask when people bring me systems, and do it all the time, is, okay, so let's change some of the parameters and let's see what happens. And, of course, most of the time, it just blows up in your face. And anti-fragility, baby, that's what we are all after. So also in later testing, 49 days excluding the recent 14 was slightly better. And it makes sense because crypto, is a 7-day market. But, let's not get hung up on the details. It's just stats, says Billy. It's just the stats, man. Exactly. I could talk about augmented Dickey-Fuller tests, CADF, and, I could also do a Hurst exponent, and, which measures long-term memory of a time series. It's basically how mean reverting is it, right? 0.5 is mean reverting, not mean reverting. And the strength of this simple approach, just linear regression, is that it allows us to compare apples with apples. Be aware, all these coins, right? They are quoted differently. Some are, being tiny shit coins, and the other one's a little bit more like Ethereum. They're starting to catch up on Bitcoin. So that means I actually, had to come up with a projection algo that converted the time series to be ranked, because you want to, you have this 49 to 14-day window and you need to compare them to each other. So I spare all the ugly details, but doing that greatly actually improved the algo. Scott was happy, and so was I. And again, the details don't matter. What matters really is the broad concept. And the performance of this is so strong that we don't really have to get cute with this. Right? So we start off trading this with a couple of small accounts just to make us put some, skin in the game and take it seriously. It's where the rubber meets the road. And Scott also started trading live on Zoom calls. He's crazy like that. On Saturday mornings, he's got a little crew he's working with, his little group of disciples, and and also to keep him accountable than anything else. And Scott would actually copy paste his results in his initial ranking. We're going to take a look at that. He's got a program that's spread out into the spreadsheet, and then he sorted them manually, do the position sizing manually. Literally, it was the simplest, dumbest shit he could do, which is kind of where I picked up the ball and wrote him one in Python, and ended up being a really good, major improvement. I also took that code then converted into the backtester, as I mentioned already, which was a real pain in the ass as it had to go backward in time and then propagate forward. You can imagine how painful that is to kind of code that and not get it wrong. So somebody had to do it, right? Usually ends up being me. So here's how he did it, right? He honestly, just looking at this still gives me a headache. He had to kind of copy and paste, the output of his scanner and then paste it into the spreadsheet here, right? And then sort it manually and then pick the winners. And then he would do the position sizing manually here, right down there. Painful, right? But doing this kind of allowed him to really internalize all of this in a very, very deep level. It's often really hard for coders to, like me, to kind of admit, but there is a huge benefit with starting out with the simplest, most dumbest, viable trading strategy, and keep it simple, stupid, right? That's what Scott says. Because if you get sucked into coding and optimizing too early in the game, you often, if not always, end up chasing down a rabbit hole. I've done many times, which is, by the way, just for the record, that's one of the major reasons why I really enjoy working with Scott, as he's, more of a big picture kind of guy, down and dirty, and just throw something together and see what sticks. So, that's how he makes it work. And here he, by the way, also used some kind of volatility-based position sizing. Remember that, ATR-based, which we later dismissed. And as I proved him, that it was at least on par, if not superior to simple position sizing. Anyway, he did this every week, and it just gave me a headache. So, and doing development with a spreadsheet instead of an automated program, in the beginning, it gave us really a real down in the weeds feel for how it would actually work, right? So there's actually a phrase I coined many times ago, by the way, during my software developer days, which goes like this: the root of all evil is premature optimization. It really holds up very, very well in software development, but also in trading, especially system development, right? The root of all evil is premature optimization. Because look, there isn't 100 years of crypto data anyway, right? It wasn't, we needed to keep it simple and stupid at first. And the biggest danger in designing trading systems really, really is overfitting. And so it made total sense. Started with a minimum viable system. And we took actually yet another precaution against curve fitting, which we did was to develop the system only on Binance, right? Which we were trading on. Only on Binance exchange data only. We never looked at anything else, right? And we did this on purpose. We called this, out of sample data, which happens to be a common quant trading concept, out of sample data. You do that for, machine learning and that kind of stuff, SMVs and stuff, vector machines. And it's a very common concept in quant trading. So when I actually started to implement the system rules then in Python, I took advantage of a Python library called CCXT, which I actually had experimented with a few years earlier, and which I really enjoyed. And I think it was back in 2018. And it has really come a long, long way since. And it made it actually quite easy to write some code, and test it against just some various exchanges, just like, quick and dirty. And if you're new to crypto trading, and this is kind of important actually, you may assume that like in equities or something, right, all exchanges share mostly the same altcoins, right? Like if you go Forex trading, right? Like there's, Forex is kind of like a collection of islands, right? Big islands, small islands, but it's not, there's no one Forex market, right? So you think it's the same in crypto. It couldn't be nothing could be further from the truth, actually. There's actually just a small subset of about like 50 coins that they all share. And of course, they're all very popular coins. How do I know? Because I wrote a script that looked at all that, and extracted those coins. Either way, when I ran the tests against those other exchanges, right, on the entire universe of coins in KuCoin, Bitrex, Coinbase, Kraken, right, it was profitable on every exchange. And we never even had, looked at these coins before. We hadn't. And this right here is how you avoid curve fitting. You take a system you developed in one market and what effectively is a completely different market, right, over here. And it works here then as well, then you got something. Now, admittedly, for the record, the crypto market is pretty highly correlated, right? It is, no argument there, right? And even in between, I actually had a spreadsheet somewhere. I couldn't find it today. I told Scott to send it to me again. Of major coins cross correlation, and the percentages are in 33%, so it's quite high, right? So it is correlated. But hey, look, it was still very rewarding to see this. This gives me a huge amount of confidence that we got a win here because it works on every exchange. So anyway, we're lucky, and the market, went into alt season, and we turned 70K into just under $1 million. And as I mentioned last time, Scott pulled some of his profits out. So I'm not saying only our system could have done this. I'm sure there are plenty of guys out there who are trading crypto, made a killing. Maybe some of you guys, did that, and it was just because the system was choosing reasonably strong coins in a very strong bull market cycle, which proved the system and then some. And it allowed Scott pull out some of his loot. So getting a little bit antsy. Approached the 1 million mark, and he just had a baby last year. His wife did it, by the way. He was somewhere involved to some extent, and it's a little girl, and luckily she looks nothing like him. Looks a lot like his wife, and that's good. But he's serious about bolstering up his retirement account, and so that little bugger and his mommy, are taken care of if he happens to get hit by a bus, on the way to the jiu-jitsu dojo. So as I mentioned already last time, this was really the biggest amount he ever took out of one of his trading accounts. I actually never have taken that much out. I don't ever recall withdrawing more than 100K myself in the past decade, at one point, and I certainly could have. But then again, I do understand the laws of compounding, and which is something, I really talk about all the time over on the blog. So let's recap, because we're in like 1.5 hours, and I don't want to go too long tonight. We've got a few more slides too, not coins, a few more slides to go. Momentum systems work. How do they work? Apply trend filter. Check. Only buy in bull phases. Rank the coins. Buy the strongest first until you run out of money. Check. And then just check once a week and sell those that aren't in your list, and you buy the new ones. That's kind of like really the simplified approach. Right? And of course, I'm going to go deep into the details on the next webinar, but I'll take some of the questions now. Please don't get hung up on the exact parameters. And, if because the idea is if you get the parameters right, no matter what you do, your system, if you need to get the parameters right, that's what I mean, then your system probably sucks, right? If it's really parameter dependent. So another way of saying is, if the system that you build, no matter what system, if it's parameter agnostic within a range, right? You can just put 0 in, or 1,000. But if it within a range is agnostic to parameter variations, then you have a solid system, right? And the way we do it really is, and we're going to get to that, on-chain metrics, blockchain. Watch the first webinar. I get into that a little bit there. And that's pretty much it. And we're going to cover a lot more of that in the next webinar. So Okay, let's get to some questions before we wrap it up. I've got 1 or 2 more slides. Can you use the data on exchange and trade on another? Yes, yes, you can, Billy. You can. Well, okay. Are you talking about the system per se, or can you use the data spit out on one exchange and use it in the other? Well, implicitly not, right? If you don't have access to that coin. What I did, and I alluded to that during the presentation, is to write a script in Python that actually actually does it all the time, automatically gets all the coins in each exchange, right? And then kind of creates a subset of the ones that are shared. And actually, those are the ones we're trading. And only the ones that, so the way we designed this is that you will be able to, if you, stick with KuCoin and Binance and Coinbase or Kraken, that you are able to always trade, right? Based on what we spit out, what we provide. And of course, nothing prevents you from doing what we're doing here on your own. Take these methodologies and take it with you and build a system just on KuCoin. And maybe in the future, I might come, if there's enough demand, I might come up with a system that trades only KuCoin or only trades Binance or Bittrex coins, right? But I have to point out, I did some testing, and actually the coins that are shared seem to perform the best. It actually improved the performance when I cut out all the other ones. And then Scott said, well, some people are not going to like not being able to trade their favorite coins. And I said, these people, I didn't say that, but I said, it doesn't matter what they, I'm a purist, sorry. And I said to them, said to Scott, it doesn't matter what they want. I want to give them what they need, which is, something that performs. And only the core, what I really call the core coins, is really what seems to perform the best. Okay, I better get going because there's a lot of questions coming in. So what would happen if you did this every day instead of once a week? Would it be more profitable cycling the coins on a faster basis? There's always one, that has to try to improve it. Brett, I can tell you this. No, it wouldn't. Actually, the rhythm of, we tested this and doing this, it doesn't improve the system because, also the way we're ranking it, right? So you still have the 49 to 14 ranking methodology, right? And then you rotate every day. No, it's actually more profitable to do it on a weekly basis. It seems to just work out best. By the way, also we started doing it on Sundays. That's how Scott started. But then I just because of the way I was coding it, was easy for me to do it on a Monday morning. Kind of, I don't know, I just did it this way. And it actually performs better. And we kind of tracked back a little bit. And it seems that Sunday, every day, you could pick any day, actually. You could trade only Wednesdays, or only Thursdays, or only Tuesdays, or only Sundays. But Sunday seems to be have more standard deviation, right? More volatility. And it's actually much harder to kind of get into these coins this way, in terms of testing and everything. So Monday is a good day. So, okay. Oh, wow, here we go. There's a lot of questions. Trading has linear regression channel by Lonesome the Blue. Okay, that I'm actually using Scott's account. He pays for it. This shit ain't cheap, and I'm really stingy. So I don't know, but it has linear regression channel by Lonesome the Blue, and also can draw standard deviation offset lines. Pretty nice work. Okay, good to know, Jim Fonair. Thanks for sharing that. So you can use that. I don't know how to do it, but maybe, hey, make a video on it, make a Loom on it. Okay, what else? What crypto data feeds have been okay to work with? Any to avoid? Well, we use the feeds directly. So I use CCXT, which directly connects to the account, to the exchanges, right? So Binance, Kraken, etc. So that's where we're getting our feed from. I actually use the Kraken feed because the Kraken feed has the most coins. It also gives me the basic currency pairs as well, like Forex stuff, because I use that in my interface which we're going to get to later, another webinar, to actually does some fancy stuff, to make it much easier for people who are not USD based. But yeah, Kraken has the most, Binance and Kraken, but Kraken especially. Kraken has really almost everything I need. So I like Kraken for that reason. It's otherwise, Kraken has a lot of overlap with other ones. So I like Kraken for that. By the way, if you just, if you're looking at platforms, for instance, NinjaTrader allows you to connect to Binance very easily. So there's a plugin for NinjaTrader and you connect to Binance. Is the main advantage, that's Grant here asking, is the main advantage of a momentum system over a trend system the selective nature of the setups? Yes, yeah, exactly. I think so. Let me think about this for a second before I agree with him. Is the main advantage of a momentum system over a trend system? Well, momentum systems, look, the difference for me, okay, maybe your definition is a little bit different. Of a momentum system is that you really are picking up on you taking an entry a lot of times near bottoms, or when you assume that, based on your rule set, right, that a big Momo move is coming, versus a trend system by definition is already in the trend. So, and I mentioned that in the presentation, that the trend system gets in late. And that's kind of like, well, I don't want that when it comes to crypto. I want the full Monty, right? I want it all. And so that's why it's got to be a momentum system. It's got to get in early and get out late, just before it rolls over. I hope that makes sense. Thanks, Grant. Are you using daily close for linear regression? Yes. Very good question. Daily close is based on, obviously, what is it? Universal time. And that was a pain to code, as you can imagine. But yeah, you could do anything. You could use a 1440 and it wouldn't make a freaking difference, but it doesn't matter. Don't need to learn the code. Yes, you have 1 week to learn how to learn the code Python. No, I'm kidding, Pilot Pete. You don't need to code at all. Well, you could. It's always good to code. It's always good to know how to code, but no, if you want to participate and just trade the system, we're not teaching people to code here. And obviously, I don't want to give away too much today, but no, you're not going to have to learn how to code. Okay, absolutely not. It would be ludicrous. What kind of upside percentages do you think that legitimate Bitcoin Ethereum miners will realize when the Bitcoin Ethereum prices explode? Yeah, well, they hold a lot of, it's in their interest, right, to mine, right? But mining becomes a lot more difficult as we move forward with halving and everything. I don't know what kind of upside percentages, I don't know. I'm not sure. Maybe explain the question in, yeah. No, I don't think. Miners basically get rewarded for mining, and that's why they're really interested in mining more, right? So higher frequency, but it's getting, high frequency is better, but mining gets more complicated. So we talked a little bit about that in the first webinar. So maybe you watch that, and that kind of might answer your question, actually, as opposed to me, getting onto a long excursion on this one for now, long tirade. So here's Brett. He asks the 45-15 linear regression. Does the line start from 60-day prior and it's 45 long, or 45 days prior and it's 30 long? The way we're doing it right now, it starts basically 49 and up to 14, right? 49 to 14. Make sense? My favorite is the most profitable. Yes. Is it? No, you don't have to code. The question twice in the chat and also QA. Are there any setups or position sizing in momentum systems? Yes. Yeah, absolutely. I mean, it's all about capital commitment guidelines, right? Generally, in momentum systems. And again, yeah, absolutely. Because, I mean, a lot of times in normal momentum systems, you also use stops. So yeah, you need position sizing. Otherwise, you're all over the place, right? But for this, yeah, we also have for crypto, for this, what we're doing here, there's position sizing and we have clear rules. They're very simple rules, but you have clear rules. Is there an exchange you recommend over others? I like Kraken, Binance, obviously, right? It's great. Coinbase, not one of my favorites, but it's one of the top dogs in the US. So, if you only US, if you're only a US citizen, then you kind of like, kind of locked into a few. You can. I think there's also, there is Binance US, right? So you can use that. They're kind of split off. That was kind of a pain. Many people had to leave Binance and then go over to Binance US. It's kind of the same thing though. So the coin selection is the same. So it's maybe not so bad. But some people have this thing with Binance because they were, when XRP, it kind of, when it was really going crazy, they kind of locked people into accounts for a while. So there were some questions about that. So there was a little bit of drama involved in there. But you hear a lot of shit about Coinbase, but yeah, they're fine to trade with. Okay. But it's not anonymous. That's for sure, right? Everything you do will be recorded, and the IRS will know about it. And capital gains, baby. So, do you recommend any Python packages beyond CCXT? No, I don't. Simple answer. I don't know any others that do that very well. I think CCXT the best. If you have that specific questions about that, let's not bore the other guys, and just send me an email. Michael at or admin at Evil Speculator, or Michael at replicons.com. Now you don't need any coding skills to build the trend filter. You can all do like spreadsheets, like Scott did. I assume it's based on the info directly on the blockchain. Right. We're going to get to that. We're going to get in a future webinar. So let's not, I don't want to answer that today. Rumor has it that Kraken has been undergoing an extensive engagement with the Fed's RS. I wouldn't be surprised. Insider suggested I minimize my Kraken engagement as my primary exchange. Well, it depends on what your purpose in life is. I personally don't fuck with the RS. Hello, guys. I don't. I pay my taxes, and if I pay my capital gains and all this kind of stuff. So it's nothing illegal. Just trade, pay your capital gains. That's it. If you're trying to be anonymous, then I'm not here to advise you on that. So is this going to be a signal service only, or can it done by him? You can do it following yourself, of course, following the rules of the webinars. There's 2 more to come, but of course there might be something in the making. So just stay tuned on that one. Yeah, probably. Do you know anything about Bitcoin options? Not much. I looked into it a few months ago, and I got really sucked into doing all this. And I actually really, really, really like to. There are some shops out there. QuiverQuant is one of them. They're getting into, and there's a few option. If you just Google it, right, the few option shops are around, but it's not like like today, like we have for equities. And I would love it. Derivatives. You guys know, I'm all over derivatives and all about option trading, especially since I started with RPQ, with the quants, and I love option trading. And so this is just going to be manna from heaven, but it's not something really we're focusing in this webinar. So it might be the next project. I'd love it. Yeah. So Mark says something very important. And then I get to Denari, who was actually asking the question before. The moves in the last 3 months aren't going to be repeated often. We're talking about catching smaller moves. No. But we're going to get to that. That doesn't mean we're not going to be able to be trading. We're going to be trading, not doing all times, but we're not going to just be trading during alt season. And I think it's very important. Alt season is when, and I've covered in the last webinar, when altcoins as a whole, as a group, right, especially the leading ones, outperform Bitcoins, in general. So that's what usually people call alt season. And so we do trade altcoins during alt season, but we do other things during the other seasons. And there are seasons when we don't trade. So it's kind of like, we need to know what to trade when and when not to trade. And I think that's, also one of my core rules when it comes to system development. Know when to step aside and not trade, because you're not doing yourself a favor. And as a system developer and also somebody who has offered signal services, you want to be, you always want to keep those guys busy, right? And well, also they're probably paying you subscription fees if you have a monthly service, which is what I had. And so, but you're not doing them any favors by sending them signals that not going to make them money. Tasty Trade is soon and greatly expanding the numbers of coins traded. Yeah, Tasty Trade is awesome. Tom Sosnoff, just a great guy. Silly hats. He reminds me of that comedian. Remember that guy that was always screaming? What was his name? Anyone remember him? I don't have the best name from memory for names. He's dead now. He got hit by some asshole in the car in traffic. And yeah, it reminds me of this guy, but he's extremely sharp. I remember talking to him way back. He was doing, I mean, here was 10 years ago, and he was answering, Tom was actually answering questions personally, right? Sam Kinison, yes, thank you, Eugene. I love Sam Kinison. Yeah, I wish I could do his scream. Anyway, yeah, he looks a bit like him, doesn't he? Right? But he's sharp, man. Anyway, great shop, and I'm glad Tasty Trade is expanding. But for now, we can only recommend the coin universe we have. If Tasty Trade comes around and he offers all that, then hey, Tasty Trade is a great shop. I send people all the time to Tasty Trade. Great people, and they take care of you. I'm not even getting paid. Tom, if you see this, I want to be an affiliate. So the moves in the last 3 months are going to be repeated often. Yeah, did that one already? Sorry. In the first talk, you showed the chart of Bitcoin macro cycle progress. What was the basis for the indicator? Is it that of stock to flow model or something else? Yeah, it's stock to flow model, right? It's basically the halving. Remember that? And the halving was pretty much matched, was really tracing very closely what was happening with price on a long-term basis, because it's just it's really supply versus demand, right? And when you have the when you have the stock to flow model, excuse me, voice is getting again. That basically what you're doing, you're taking all the stuff that's out there. Let's say gold, right? All the gold ever mined, and you compare that with the gold that is being mined right now, and that basically gives you this kind of model, right? And it kind of steps, right? And we observe a similar phenomenon in Bitcoin especially, right? And also in Ethereum a little bit. And it kind of really traces prices very, very closely on a very, very long-term basis, and it really shows how the cycles are. And I think that's the basis, and I think it's going to continue for quite a while to come until the last halving. The last halving, like Highlander, remember that? Okay, 9 coins total. Somebody said, okay, I don't think there are any more questions. Is there a preferred platform? Coinbase? I think I answered already. Don't need to learn. When will you publish the system? Well, very soon. Very soon. We have another webinar on Friday. Hopefully, if I get it all done, because I've been working day and night on this every day, and then I'm doing also the blog and everything. So the schedule right now is Friday, and on webinar is the big fourth one, the big reveal, right? So that's it, and then we're going to publish it, of course. And of course, you guys are going to learn a lot in between, because I want you to be there for the next webinar as well. Still a few people here. Oh, well, a lot of people still here. Awesome. Thank you. After 2 hours. Thank you. If there's nothing else, it is midnight over here. So unless you have any intelligent question, I do all intelligent questions, then I'm going to go and retire. Yeah. Thanks. Post recording of this? No, just because you asked, I'm not going to. Yes, of course I'm going to post a recording of this. It records automatically. I just have to edit, make it pretty, and then I'm going to post it. It takes me probably a day or so. So one more question is there. Suggested minimum and max for number of coins in bucket. How many fingers are on your hand? Yeah, 5. That's actually 10. I tested with 10 as well. 10 works, gives you actually more performance. But we thought about it, but it doesn't give you enough performance, additional performance to justify taking 5 more coins. And so we settled on 5. But hey, if you want to trade 10, know that 10 actually, the top 10 perform the best. That's it. Michael says, another Michael. I swear I didn't write this myself. Thank you very much. Lots of fun. I love this stuff. And I love you guys. I love you for showing up. All of you, for putting up with my silly jokes, German humor. I know it's painful, but yeah, my voice is almost gone, as you can hear. So I'm going to go to bed now. And I see you all next time. Thanks, guys. Bye-bye.